Valuations can be frothy.
Going public is almost like what some of us would like to say is the holy grail, right?
IPOs are a trend, not a bubble.
Do secondary markets exist? Answer is absolutely yes, and it's been around for a very long time.
Valuations could be high or low, and valuations may correct over time, but IPOs are here to stay.
It is basically a graduation ceremony of sorts. It is potentially where a startup stops being a startup and starts becoming an enterprise.
The IPO space has just started in the past 24 months. The startup ecosystem has been around for 15 years.
Fundamentally, if you have a strong business and you have predictability of cash flows and you can actually give with a fair degree of confidence where the business is headed, the market will reward you.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. That's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
We are very clear that shipping is also strategic, because without that you can't really be the third largest economy in the world.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. That's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
We are very clear that shipping is also strategic, because without that you can't really be the third largest economy in the world.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
A very good morning. You're watching News9 Live. I'm Karthik Malhotra. Gold has touched its all-time high and US Federal Reserve has kept rates unchanged. Also on the show, just a day to go for Budget 2025. Is this going to be the budget that will spark India's energy transition? We'll get you these stories and more right here on Morning Brief at 9. This is Morning Brief at 9. I'm Karthik Malhotra. First up, let's take a look at all the global headlines making news this morning. The US Federal Reserve holds interest rates steady. Jerome Powell says it's too early to assess economic impact of Trump's policies. Wall Street ends lower as Fed holds rates steady. Tech stocks drag markets down despite Powell's reassuring comments. Microsoft and OpenAI investigate potential data theft by Chinese AI startup DeepSeek. And as DeepSeek finds its market, another Chinese player, Alibaba, releases Qwen 2.5 AI model, claims it surpasses DeepSeek V3, intensifying the competitive AI race. Meanwhile, chipmaker ASML beats Q4 expectations in the US with a $7.4 billion in bookings, driven by strong AI demand. And European luxury brand LVMH considers expanding US production, citing hope amid France's tax concerns. Airbus bound for Hong Kong. The flight catches fire at Gimhae Airport yesterday. All passengers safely evacuated as investigations begin. And in the US startup boom, Supersonic's XB1 breaks the sound barrier, bringing supersonic air travel, the one that Concorde had made popular, a step closer to reality. Taxi drivers block traffic across Spain in protest against soaring insurance premiums. The US Federal Reserve has decided to hold interest rates steady, keeping the benchmark overnight rate in the 4.25% to 4.5% range. Fed Chair Jerome Powell, in his remarks, said it's too early to determine how President Donald Trump's policy will impact the economy. Listen in.
Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Well, steady rates in the US with Fed's latest announcement. But moving to Wall Street, well, Wall Street closed in the red after US Fed held interest rates steady as widely expected. Fed Chair Jerome Powell's remarks provided some reassurance to investors, but markets still ended lower. The Dow slipped about 0.3%, while the S&P 500 and Nasdaq each lost around 0.5%. Take a look.
U.S. stocks ended lower on Wednesday, but off their lows of the day after the Federal Reserve left interest rates unchanged. The Dow dipped about 0.3%, while the S&P 500 and Nasdaq each shed roughly 0.5%. The indexes paired losses after Fed Chair Jerome Powell said monetary policy was, quote, well-positioned for the challenges at hand. Regan Capital's Chief Investment Officer Skylar Winan said that despite recent volatility, the market remains resilient.
We're sitting in a pretty decent seat for the market looking forward to be able to absorb earnings releases and new data and the administration pieces to come out in the future. So I think I would breathe a sigh of relief that it's not down a lot more than what it is today.
Technology shares were the biggest drag on the S&P 500, with Nvidia down more than 4% and Microsoft also finishing lower. The losses came 2 days after Chinese startup DeepSeek's AI model sparked a massive tech sell-off. Reporting after the close, Meta Platforms said fourth quarter revenue beat Wall Street expectations, but predicted sales in the current first quarter may not meet forecasts, sending mixed signals about how bets on pricey AI-powered tools are paying off. Its shares, up slightly at the close, rose further in extended trading. Shares of Tesla, which ended down more than 2%, also climbed after hours despite quarterly profit and revenue falling short of Wall Street expectations. The EV maker, however, said it was on track to roll out new cheaper models in the first half of 2025. And Levi Strauss forecasts annual profit well below analysts' estimates, sending its shares down more than 7% in extended trading.
All right, that's an update on the Wall Street. We will shortly bring you updates on the Indian markets as they open in a few minutes from now. But moving on, Microsoft and its investee company OpenAI are together investigating whether data from OpenAI's technology was accessed without authorization by a group linked to the Chinese AI startup DeepSeek. Now that, according to a Bloomberg report, which comes amid growing concerns over data security and the global AI race. More details in this story.
Microsoft and OpenAI are probing if data from the ChatGPT maker was obtained in an unauthorized manner by a group linked to Chinese AI startup DeepSeek. That's according to a Bloomberg report published Tuesday. The report says that Microsoft security researchers observed several months ago that individuals they believed to be connected to DeepSeek exfiltrated a large amount of data using OpenAI's application programming interface. The API is the main way that software developers and business customers buy services from OpenAI, which counts Microsoft as its largest investor. Bloomberg reported that the Windows maker notified the company of suspicious activity. Low-cost Chinese AI startup DeepSeek, an alternative to US rivals, sparked a major tech stock sell-off earlier this week. Its free AI assistant overtook OpenAI's ChatGPT on Apple's App Store in the US. David Sachs, the White House's AI and crypto czar, told Fox News on Tuesday that it was possible that DeepSeek stole intellectual property from the US. Asked for comment on the Bloomberg report, an OpenAI spokesperson echoed Sachs's comments without actually naming the Chinese firm. Microsoft declined to comment, while DeepSeek could not immediately be reached for comment.
And as action in the AI space heats up and the competition between US and China gathers momentum, another Chinese tech giant, Alibaba, has unveiled a new version of its Qwen 2.5 artificial intelligence model on Wednesday, claiming it has surpassed the widely praised DeepSeek V3. Now, according to Alibaba, the latest Qwen model outperforms even the most advanced open source AI models from DeepSeek, OpenAI, as well as Meta. Take a look.
The artificial intelligence race ramped up a notch this week and shows no signs of slowing down. Alibaba has released an AI model it claims surpasses the highly acclaimed DeepSeek V3. The Chinese tech giant announced a new version of its Qwen 2.5 AI model on Wednesday. The timing of the release is unusual as it lands on the first day of the Lunar New Year, when most Chinese people are off work and with their families. It could point to the pressure Chinese AI startup DeepSeek has placed on both overseas rivals and local competition. Alibaba said its latest version of Qwen outperforms DeepSeek, OpenAI and Meta's most advanced open-source AI models. This month's release of DeepSeek's AI assistant has shocked Silicon Valley and caused tech shares to plunge. The firm's supposed low development and usage costs led investors to question huge spending plans by leading AI firms in the US. But DeepSeek's success has also led to a scramble among its domestic competitors to upgrade their own AI models. The predecessor of DeepSeek's V3 model sparked an AI model price war in China after it was released last May. It led to Alibaba's cloud unit announcing price cuts of up to 97% on a range of models. Other Chinese tech companies followed suit, including Baidu and Tencent.
Now, despite concerns being raised by Chinese AI firm DeepSeek, Dutch computer chip equipment maker ASML reported stronger than expected fourth quarter bookings on Wednesday. The company secured a $7.4 billion, boosted by high demand for its advanced tools. Take a look.
ASML beat market expectations in the fourth quarter. The Dutch computer chip equipment maker scored bookings of $7.39 billion. A boom in AI drove demand for the company's most advanced equipment. The number was almost double analyst projections and much higher than the third quarter's total. ASML also reported net income of $2.8 billion. Investors were delighted by the news and shares jumped 11% early Wednesday. The large order influx may reassure ASML and other chip stock investors that AI chip prospects might stay healthy. That after a tumultuous week dominated by the global emergence of Chinese AI firm DeepSeek. Its model uses less computing power than those of rivals, calling into question whether tech giants like Google and Microsoft will need to follow through on plans for huge investment in AI chips. Large chip makers like Nvidia endured a brutal sell-off after the model's release. ASML's top customer, Taiwan's giant TSMC, manufactures most chips designed by Nvidia and the software firms.
And staying with Europe, luxury giant LVMH is considering expanding its production capacities in the United States, according to CEO Bernard Arnault. Marking the announcement, Arnault highlighted the wind of optimism in the US, contrasting it with the cold shower of higher corporate taxes in France. Listen in.
Luxury giant LVMH is considering bulking up its production capacities in the US. CEO Bernard Arnault on Tuesday praised a wind of optimism in the country that contrasted with the, quote, cold shower of potentially higher corporate taxes in France. LVMH makes billions selling made-in-France luxury goods to the world. So far, it has little production capacity in the US, besides 3 Louis Vuitton workshops and some Tiffany jewellery making sites. But Arnault, who is also LVMH's main shareholder, said he was open to increasing the company's footprint. His family attended President Donald Trump's inauguration earlier this month, sitting just a few metres from Trump's lectern, alongside other billionaires. He said US-based factories benefit from attractive tax conditions and that Trump is encouraging investments. France's richest man has also voiced frustration about his home country's recent plans to additionally tax large companies. The US market accounts for 25% of group sales. Arnault's comments came as LVMH posted a slight rise in fourth quarter sales. The luxury bellwether beat expectations with a 1% rise in sales as demand for designer fashion and handbags picked up over the holiday season. Sales for the 3 months to the end of December reached nearly $25 billion.
All right, US startup Boom Supersonic's XB-1 made history at about 35,000 feet above the Mojave Desert, northwest of Los Angeles. The aircraft became the first privately funded airplane to break the sound barrier during a successful test flight. Here's more.
The return of supersonic air travel just might have come a step closer.
There we are. XB-1 is supersonic, faster than the speed of sound.
US startup Boom Supersonic sent its XB-1 jet through the sound barrier on Tuesday. It says the test flight over the Mojave Desert marked the first time any privately funded plane has hit the landmark speed. Legendary pilot Chuck Yeager was the first human to exceed the sound barrier back in 1947. Such speeds have since become routine for many military aircraft. But supersonic travel hasn't been on offer to airline passengers for some 2 decades. That is, since the Anglo-French Concorde was retired in 2003. Its success was limited by high operating costs that made tickets very expensive. Now Boom has plans to develop a successor. Dubbed Overture, it's meant to carry up to 80 passengers across the Atlantic in about 3.5 hours. That's roughly half the time taken by a regular jet. Company CEO Blake Scholl says regulations are now the main stumbling block.
Today we have one of the silliest rules in the world, which is you can't fly supersonic over land, no matter how quiet the airplane is. And so we're picking up where Concorde left off. Initially, we'll fly right under the speed of sound over land, which is still 20% faster than a Boeing or Airbus. And over the water, we'll open up the throttles and go twice as fast.
Boom hopes those regulations will change and says Overture will be much more economical to operate than Concorde. The firm has completed construction on a factory for the new plane in Greensboro, North Carolina. It says it has 130 orders and expressions of interest from American Airlines, United Airlines and Japan Airlines. But years of research and development still lie ahead before any passenger boards a supersonic flight.
Well, time for a quick break right here on Morning Brief at 9. But more stories from India, India's business landscape and economy coming up on the other side. Don't go anywhere. You're watching News9 Live.
Associate sponsor, New Virtus GT Line, style to wander.
Your promise is IGI certified. Your legacy is IGI certified. Your ambition is IGI certified. Your diamond is IGI certified. Authentic moments need authentic diamonds. Get your diamonds IGI certified. 14-step grading process. 50 years of trust. IGI Trust Certified.
तेरा बच्चा मेरा नाम जरूर रोशन करेगा। बच्चों से नाम रोशन करवाने का परफेक्ट प्लान कैनरा HSBC लाइफ इंश्योरेंस चाइल्ड प्लान। कैनरा HSBC लाइफ इंश्योरेंस प्रॉमिसेस का पार्टनर।
Mama must be missing us, na?
Let's take you on spin, give me one day. Feel the itch under my skin, it's a one day. You believe it when you see we end up, hey. It doesn't matter, just gotta get going.
New GT Line, Taigun and Virtus. Volkswagen.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Welcome back. You're watching Morning Brief at 9. The Indian stock markets have opened just a few minutes back and it's been a flat opening on the broad indices, the Nifty 50 and the Sensex 30. Let's look at where the figures are holding right now as markets open. Well, Nifty absolutely flat, just marginally in the red, down from about 23,160 odd levels to about 23,157. Similar story on the Sensex as well. What seems to be worrying right now for the markets is the volatility. And volatility is now nearing the 19 levels. Now this of course is coming by a multiple number of reasons. Number one, what is happening in the US with the US Fed keeping rates unchanged. This was something that was expected, but Donald Trump waking up every morning and announcing some sort of shocks that go down in the markets, whether it is tariffs or expansionism. Now add to that the expectations from the union budget, keeping investors a little bit on the edge right now. Let's look at the heat map of the Nifty 50 and try and make sense of what is happening there. Remember, the US Fed kept rates unchanged, and that means that discretionary spending by big companies in the US who give business back to Indian IT companies is not likely to see an uptick with the same cost of capital. So the IT sector is squarely in the red this morning. In fact, all the IT stocks from Infosys, which seems to be the second biggest loser after Wipro. Wipro is down about 1%, followed by Infi, down about 0.8% or so this morning. Even TCS, HCL Tech and Tech Mahindra in the red. Look at the auto sector. The auto sector announced results yesterday. Maruti Suzuki had reported a 16% jump in its Q3 profits. Maruti is up about 0.5%. Contrasting starkly with Tata Motors. Look at Tata Motors on your screen today. Tata Motors is down about 7%. After its passenger sales and revenue from passenger sales for quarter 3 in fact dipped on a year-on-year basis. Bajaj Auto came with expectations and lived up to the expectations of the market. So Bajaj Auto also holding in the green this morning. But let's move on and take a look at other headlines making news in India today. After a global stock market rout with DeepSeek sending shivers down tech and energy stocks and Trump's tariff threats, investors find solace in safe haven gold. The precious metal touches an all-time high at 83,750 rupees for every 10 grams in New Delhi. Meanwhile, Moody's has downgraded India's FY25 growth projections in line with NSO estimates at 6.4%, down from 7.2% projected earlier. High inflation and slow consumption drive the downward trend. The Directorate General of GST Intelligence, or DGGI, Bengaluru, has made 2 arrests in a 3,200 crore GST fraud. 30 searches reveal 15 bogus companies with inward e-way bills but no outward bills. With flights to the Kumbh Mela, Prayagraj nearing as much as 30,000 rupees for a one-way ticket from Delhi, Civil Aviation Ministry steps in to curb profiteering. IndiGo reportedly cuts prices by 30 to 50%, but no official statement yet. Maruti Suzuki's Q3 results show a 16% growth in profits to over 3,700 crore rupees for the December-ended quarter year-on-year. A 20% jump in utility vehicle sales, while small car sales fall over 2%. Meanwhile, Tata Motors' Q3 results show a decline in revenue from car sales, even as commercial vehicles show growth. Stock is down 7.5% in early trade this morning. Staying with the auto space, Ola Electric, the Bhavish Agarwal-led company, is now set to unveil its Gen 3 electric scooter this week. Consumer complaints on servicing issue said to have been resolved, but will Gen 3 bring in buyers? Just 2 days to go for Budget 2025. Will Finance Minister bring cheer to India's middle class? We'll find out on the 1st of February, right here on News9 Live. And what we discuss on the show today, will Budget 2025 spark the energy transition, not just in electric vehicles, but also power grids? That's something we'll discuss on the show today. Let's begin with the precious yellow metal, the love for most Indians. Well, in bad news, gold prices have hit a new record high on Wednesday, reaching 80,979 per 10 grams in the futures trading. But jewelers in New Delhi had prices running as high as 83,750 rupees per 10 grams for 24 karat gold. The rise is a result of fresh speculative positions amid global uncertainty and added momentum to safe haven investments. Now, add to that, delivery of gold contracts saw major activity with as many as 13,257 lots traded in the market, while global gold futures slightly declined by just about 0.1% to $2,760 per ounce in New York. India's gold prices are soaring. Now, analysts attribute this surge to speculative trading and a weaker rupee against a strong US dollar, with concerns about tariffs, economic deficits and de-dollarization playing a role in boosting demand for gold. In addition to all of this, US President Donald Trump calls for rate cuts that did not come through at the US FOMC yesterday, as well as DeepSeek sending deep shockwaves across global markets, and these have added to the uncertainty around stock market investments and the inverse relationship between stocks and gold playing out. With declining stock markets, the price for gold has been pushed up. Meanwhile, In bad news for the Indian economy, Moody's has cut India's growth projections for this year, FY25, from 7.2% stated earlier to just 6.4% now. Now, this number, while is in line with the estimates of the National Statistics Office or NSO, it seems to be lower than RBI's projection of India's growth to come in at 6.6%. India's economy is facing challenges, and all through 2025 there has been a consumption slowdown, especially in Q2, driven by inflationary pressures and weak domestic demand. The government as well as the Reserve Bank of India are caught in what is called a trilemma, trying to balance growth, inflation and currency stability. Persistently high interest rates are expected to dampen private consumption and investment in the early part of the year, and analysts predict an easing of monetary policy, hold your breath, not in February 2025 but only in April 2025. The rupee's decline hitting an all-time low of 86.6 rupees against the US dollar in January adds to the economic strain. Now, Moody's report also highlighted a slowdown in GDP growth, with the September 2024 quarter posting a growth of just 5.4%, down from 6.7% in the previous quarter. This is the weakest performance since late 2022, impacted by, like I told you, persistent inflation and high interest rates. Now, other factors, including heavy rainfall and reduced government spending ahead of 2024 general elections, have further slowed down economic momentum. So all eyes are now on the union budget FY25-26, which is set to be presented by Finance Minister Nirmala Sitharaman on the 1st of February. And the focus is expected to be on boosting domestic demand by giving more money in the hands of the people for them to go out and buy. But then reducing the fiscal deficit could prove to be a challenge. Moving on, the Directorate General of GST Intelligence, or DGGI, in Bengaluru has uncovered a massive GST fraud worth 3,200 crore rupees, and it has arrested 2 individuals involved in the case. A third suspect is still at large. The DGGI's Bengaluru zonal unit carried out searches across more than 30 locations in Bengaluru and Mumbai, revealing an intricate scam. The accused set up bogus companies, as many as 15 of them, without legitimate operations. It engaged in circular trading to artificially inflate their turnover and even listed some of these companies on the stock exchanges. The fraud involved facilitating the availing and passing of fake input tax credit, totaling as much as 665 crore rupees. The scam's total value, including fake invoices, exceeds 3,200 crore rupees. Ola Electric is set to unveil its next generation electric scooters based on the Gen 3 platform later this week, according to its founder Bhavish Agarwal. The Bengaluru-based company will showcase scooters on Jan 31st, that's tomorrow. The promise: enhanced performance, new features and a design that sets these scooters apart from their predecessors. Bhavish Agarwal also hinted at a surprise that could revolutionize the industry once again. The new platform is expected to provide a 20% margin savings, with more savings expected over time as the Gen 3 technologies are integrated. With that, it's time for another quick break. But on the other side of the break, we'll discuss, will Budget 2025 spark India's electric transition and the energy transition movement? Stay tuned. You're watching Morning Brief at 9.
We are at the highest airfield in India and one of the highest airfield in the world. It is the most beautiful airfield in India. There's no aircraft that cannot land on this airfield.
This will be the highest airfield in India and 5th in the world.
This particular runway will cater for most of the military aircraft, fighters and transport landing.
a strategic edge to the forces, deterrent for our neighboring countries.
Jai Hind.
Yes, 100% completion. TV9 News and your News9 Plus is the first team here.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Watching a special coverage in the run-up to Budget 2025, and the big question that we will try to ask and address today is that while there are hopes that Budget 2025 will offer a magic bullet for the middle class, will it also offer a magic spark for India's energy transition? Well, let's look at some of the pertinent questions that we intend to ask on the show today. Number one, will Finance Minister bring back the FAME subsidy scheme in Budget 2025? Remember, we've seen FAME in multiple other names and multiple other avatars after FAME 2 subsidy ended. But is there a case for the electric mobility transition to come back? And is FAME 3 going to be the ideal tool to bring it back? What about charging infrastructure? Is it time that Budget 2025 gives a real boost and a real fillip to charging infrastructure, something that's critical to the EV penetration and is right now holding consumers back from buying those environmentally friendly, albeit a little costly cars? Now, next up on the agenda today, is there going to be a recharge for the PLI schemes relating to solar panels, batteries and auto components? Remember, these three are already part of the 14 sectors under PLI. But is there going to be a shift in allocation and some rejigging in the PLI scheme to give a further boost to solar panels, batteries and auto components, especially for electric vehicles? Add to that, the Pradhan Mantri Muft Ghar Yojana, solar rooftops for households, as many as 1 crore households. Is it time for the budget, in the interest of fiscal discipline, to rethink the free electricity part, or is it actually time to pump in more and more into making the solar rooftop scheme more popular? Finally, the Finance Minister last year in her budget speech in the month of July mentioned that India must transition to nuclear energy, even though there was no real allocation towards nuclear energy. Now, with the United States likely to push imports, US imports into India, should those US imports try and first fuse India's nuclear relations with the US and the technology transfer that India has been waiting for with Donald Trump in power? Should budget incentivize India's nuclear energy? And last but never the least, critical mineral mission. This is again something that Finance Minister announced in her budget speech last year. So as US goes for drill baby drill, is it time for India to go mine baby mine and get those critical minerals extracted from onshore and offshore activities? That's something we will discuss on the show today. Just to give you some numbers and put this entire debate in perspective, last year there was a 19,100 crore rupee allocation for the Ministry of New and Renewable Energy. Now, we don't know how much of that has been spent just as yet. Hopefully, we will get clarity in a day or two from now. add to that, there's a 10,000 crore rupee allocation for the Pradhan Mantri Muft Bijli Ghar Yojana, the solar rooftop program, a 10,000 crore rupee allocation on that last year. And we're talking about nuclear energy. There's a 24,969 crore rupee atomic energy development budget allocation last year as well. Where do we stand on all of these budgetary allocations, and what should really be the way forward for India's energy and electric mobility transition? Joining me to discuss that today are two very special guests. Dilip Chenoy, Chairman, India Battery Swapping Association. Thank you for joining us, Dilip. Welcome back to News 9. And also Hina Kushlani, Partner Climate Change and Sustainability Services at EY. Dilip, let me begin by asking you, when we talk about energy transition, I think the first thing that comes to mind is electric vehicles and the electric mobility transition from ICE engines. We were discussing on News 9, just a few days back on should the focus this time around on budget be bringing back a subsidy scheme like FAME or incentivizing the boosting of charging infrastructures?
So, Karthik, it's great to be back again with you, and this time with you being the anchor. So I don't have competition in getting numbers and facts out there. So, if you look at the budget here, and you look at what happened last budget, the PM E-Drive scheme came up, right? And this really focused on public transportation and, the whole area of 2- and 3-wheelers and passenger cars subsidy was eliminated. The thinking is that this budget will see a greater emphasis on public transportation and, of course, charging infrastructure, hopefully both fixed charging and swap charging. So the idea here would be to address the huge installation costs and capital costs upfront for the charging infrastructure, and also direct it to specific areas and specific cities as you see that happening. Also linked to this whole space are the two PLI schemes, the alternate cell chemistry and the PLI for vehicles. And of course, the third scheme initially, and if you recall, we had this discussion on your channel earlier, whether the manufacturing scheme for electric vehicles was skewed towards Tesla and the US, but that policy has not been able to attract as much investment as they hoped it would attract. So you would see possibly some tweaking of that, but that's not necessarily a budget item, but can happen simultaneously. Okay. So net, enhanced focus on PM E-Drive, hopefully inclusion of greater focus on charging, and of course looking at streamlining and increasing allocations for the alternate cell chemistry and the manufacturing of electric vehicles in this budget.
All right. Before I bring Hina in, Dilip, one more supplementary question to you on what you were saying. Now, if there is likely to be a boost for the charging infrastructure, should that come by way of subsidies for the private sector, or should the government take on the mantle itself and have an infrastructure allocation for the government capex specifically dedicated to charging infra?
Yeah, Karthik, a very interesting thing has happened over the last 1 year. Most of the oil companies have actually gone into joint ventures with battery charging infrastructure areas. So I think by pushing them rather than the government getting into charging infrastructure, because there's a lot of other challenges involved, right? So I think it'll be good to allow joint ventures in the private sector to take this initiative. But I think the government has to create a mechanism with the states, because a lot of the charging infrastructure is stalled or is very high cost because state energy policies, whether they, some of them charge industrial tariff for the electricity, others, involve setting up transformers. So how do you actually streamline this across the different states and encourage the states to also support the central schemes? Will be a key transition that you will see this year. The ministry is aware of it, the government is aware of it, Niti Aayog is aware of it. Yeah. In fact, in the last meeting that Minister Goyal took with everybody, this is a big issue which came up. Hopefully, this is a better way to address it than the government getting into putting up e-charging stations.
All right. Right, sure. Hina, let me bring you in and let's open this up a little bit beyond Budget 2025 and really look at a macro 35,000 feet view on what's happening in the world. And when you talk about what's happening in the world, what is happening in the world right now is Donald Trump. And Donald Trump is going drill, baby, drill, and has called climate change to be absolutely bogus. Do you think any of Donald Trump's Trumponomics and Trump thinking is likely to influence what happens in the overall climate change, energy transition space in the world, more so in developing economies like India?
Thanks, Karthik, for having me. It's a pleasure. Frankly, I'm not sure if anyone in the world other than Donald Trump has an answer for this, or even probably he doesn't. The reality is that Trump is placing US economy at the top. And in order to boost the economy in the short term, they're going back to the old ways, right? And hence trying to the drill baby drill and some of the other measures like removing the EV subsidies. Now, the EV subsidies in the US were not necessarily as effective in the short term if we look at it. I mean, last year, I think EV sales in the US went up by just 7%. So I think overall, what they're trying to do in the US is definitely placing their economic growth first. How is this going to impact the rest of the countries, and specifically emerging economies like India, where I think in the previous COP29, we made it very clear that we're looking for a certain amount of financing support from the developed markets, right? I mean, in India took the baton on behalf of all the emerging markets to be able to fight for that. Now, at the end of the day, the 300 billion that has been mobilized, right now, there is a bit of a question mark on how that can come. But with that being said, the general sentiment on foreign financing, or the general sentiment on if the other countries, especially the European Union, is going to continue with the measures that they are, it seems to be yes. We have not seen any evidence so far to say that the momentum in the rest of the countries is going to change anytime soon.
All right.
With that being said, the reality remains that we should, in an ideal case scenario, we should continue the momentum, because if one of the largest economies in the world is looking to step back, the others have to step up,
Right.
Because at the end of the day, climate change does impact everyone.
All right. So hold your thoughts there. Hina, I'll come back to you specifically with the solar rooftop and the nuclear energy program, but I want to bring back Dilip here. And Dilip, I want to understand from your experience, being head of CIAM and overall dealing with the government across various, positions that you've held in your career. I want to understand from you, brass tacks, what is the sole goal or the more important goal of India's push for energy transition? Is it addressing climate change? Because that obviously makes great global headlines. Is it really caring about the environment when we talk about pollution and tailpipe emissions, and hence, moving away from fossil fuels and adopting greener, cleaner energy sources? Or simply put, is it about reducing India's import bill? And if we have a clear prioritization, it might help the government channelize policies accordingly.
I think, Karthik, it's actually all three, and they're prioritized very differently. So if you look at the import bill for oil, the transport sector initiatives that are taking, whether it is FAME, eDrive, alternate cell chemistry, the manufacturing of EVs, the ethanol blending, that's a big program, the flexi fuel vehicles, etc. So all that is aimed at reducing the oil import bill. So, that's one bucket. The second thing is that, we have committed to the Paris goals. We are ahead of that. We have huge ambitious targets to go into renewable energy, 500 gigawatts by 2030, 680 gigawatts by 2032. And, remember, this government is going to be there till 2029. So all of these targets have to be achieved in this period. And therefore, the second really thing is on the solar thing. And again, we don't want to land up importing lithium. We don't want to land up importing solar cells. So you have the PLI scheme for solar. You have the mineral exploration policy and critical mineral exploration policy for lithium and alternate cell chemistry here. And then, of course, as a country, we're going to net zero by 2070. We've committed that goal. So the climate change is there, and we are going to be impacted very, very significantly by climate change. And agriculture is an important sector. And therefore, you saw in the last two budgets, the finance minister actually talking about climate resistance agriculture and kind of programs to actually address the climate impact on agriculture, and you'll see some more of that in this budget 2025.
All right. Well, Hina, let me bring you in now. Let's talk specifically about some of these sectors and some of these areas that Dilip just mentioned. Let's begin with the solar rooftop program. Now, remember, this was announced a few weeks before Budget 2024. In fact, in the run-up still to the elections of that were held in the month of May, Prime Minister Modi had announced 1 crore houses to put up solar panels and get free electricity. Now, while free electricity was a great election campaign, do the economics of that work out well? I understand you need to incentivize the population to make those investments, even though those investments are subsidized. But do you think gradually it's time to phase out those subsidies for households that have installed the solar panels already and have them running for almost a year now?
So frankly, I think, Karthik, a year is a little too less when it comes to some of these programs, right? I mean, what has happened, and I believe, so the reality is the scheme that was announced last year was actually a revamp of a scheme that was announced 2 or 3 years ago. And there were some issues in terms of how these residential solar rooftops were being deployed previously. And then the revamped scheme that was launched last year has taken off. I mean, I think there's been 50% increase in the residential solar rooftop market in India, which is fantastic, right? We're also looking at primarily in the short, like in the near term, probably the residential rooftops will take over the industrial rooftops in some form or the other. So I believe the residential rooftops are key to India's energy mix, and the way it's been financed and the subsidies have definitely helped. I also do believe that we should the government should continue the scheme for some more time until we're able to, and probably look at removing these subsidies. Probably a few years from now. I would give it another 2-3 years, to be honest, because the reason being residential solar rooftops are very important to decarbonizing India's energy mix when it comes to, on the residential side, not necessarily in tier 1 cities, because tier 1 cities, there's absolutely no space. I mean, even if we put rooftops in some of these office buildings and residential buildings, it's only going to contribute to a little bit of the energy mix. I mean, overall, what we need to do is get solar energy and renewable energy from the grid for the larger metro cities. But with that being said, for the smaller cities, this scheme does play an important role. And hence, I believe not removing it anytime soon is important so that we can achieve our targets. We're still really away from achieving our 50% energy mix by 2030 for renewables.
Right, of course, that's a long way to go, and we hope we'll get there someday. But it's a double-edged sort of advantage for India. You are subsidizing and pushing for solar rooftop panels to be installed across crores of households, but at the same time you also have a PLI scheme that incentivizes building of these solar panels. But Dilip, if data serves me right, I know you told me that data should be my job today, but if data serves me right, one of the key items that we continue to import from China happens to be these solar voltaic cells and solar panels. Have you seen in the last 1 year or so there has been enough manufacturing fillip to making these solar panels in-house?
I think, Karthik, if you look at the trends, this is very important because it takes time to start up an investment in this whole process and take it forward. You are seeing increasing manufacturing happening today. And the long term, just to add this bit to what Hina was saying, the long term benefit of a solar rooftop scheme is that you can eliminate the subsidy that has been given to each household. The 300 rupees subsidy, from the normal grid. So that's a long-term challenge or a long-term objective there. But in terms of solar panel manufacturing, phase 1 was not that too good. They announced phase 2. Probably you will see a phase 3 coming up here, which will try and accelerate this whole solar panel development in this space. So yes, unfortunately, phase 1 happened to coincide a bit with the end of COVID and that type of space, but phase 2 has actually taken off. You will see a phase 3 coming up, and it's important for India to look at it. And you have this nuclear energy. I think you will see something happening.
Right.
you will see something happening in that space. Yeah.
Right. So, Hina, share your thoughts on the nuclear energy, because this is something that was mentioned in the budget last year. Well, we didn't know at that time whether Donald Trump is going to come to power or not. But India's US, India-US nuclear deal, the civil use of nuclear energy deal has been pretty much in a limbo since 2008. We haven't really seen much activity for the last 16, 17 odd years since the deal was signed. Now, with Donald Trump in power, wanting to push American exports, are we going to see some transfer of technology? And is this the opportune time to play to India's own energy transition, as well as at some point, go ahead and shake more hands with Donald Trump and get some nuclear energy technology from the US? How should the whole nuclear energy transition play out, and what can budget do for that?
Sure. I think, thanks, Karthik. The reality is that nuclear energy plays a very important role in not just India, but in the global transition towards clean energy. I think United States has also been continuously investing in nuclear energy, and technology transfer becomes really important between some of these countries, right? With the recent announcement from Donald Trump a few days ago, I think this is the right move and definitely the right time for India to start investing in nuclear energy. I think what's the few changes in the last 6 months that we've seen in the Indian nuclear energy landscape is definitely that they're inviting, it's not just a public sector play anymore. I think what we're looking to also do is invite some of the private sector to be able to invest in the nuclear energy mix. I think that's fairly recently, I think on 31st December, this was announced, where NPCIL actually has asked for the small nuclear reactors to be developed. And so this is very interesting that there is a strong private sector play in the nuclear energy market space in India as well. But with that being said, it does require a lot of support on technology transfer. It does require a lot of support on public-private partnerships, even in terms of investments and how this energy will be run and how it plays out. So this is frankly just the beginning. And we hope that there would be a little more support towards developing this sector in India, because like I said, if we want to achieve net zero by 2070, nuclear energy plays a really important play, not just in India, but we've seen that nuclear fusion technology is also being incentivized and supported in the United States and some of the other countries. So being able to get that technology transfer, we need a certain amount of support from the government in India, and we hope to get that in the budget this year. Yeah.
All right. Well, all hopes are pinned on that tech transfer to come through by way of some policy measures that could be introduced in the budget. But Dilip, let's go back in the interest of time. We're just a few minutes away from closing the show, but let's move back to where we started from. We were talking about electric vehicles when we started this discussion, and during the course you also mentioned lithium imports into India, and that is something that that we need to, from a policy perspective, try and contain. But the simple question is that, is this budget going to really go ahead and make mine baby mine a policy? Do we need to go and mine our own mineral bases? Remember, there was a news item that there were reserves of lithium found in J&K, but we really didn't see any excavation activity take place. So is this time to actually try and figure out what are the minerals, what are the mines that we have? Do we have enough lithium, and can we really stop our lithium imports in the interest of India's electric mobility?
I think in the interest of time, 2 quick bullet points. First, in the last 1 year, a lot of work has been done about the mineral reserves here. The Ministry of Heavy Industries actually set up a group. They set up these 12 groups in different parts of electric vehicles. They'll set up a group on mining. The mining budget also will see some significant inputs here. You will see the overall number. The budget will give an overall number. I don't know whether it'll figure in the speech, but there is a renewed drive to see not only lithium but cobalt, nickel, the other minerals and metals that are required in this whole space.
Right.
You will see that happening.
All right. Well, let's leave it at that. Dilip Chenoy, Chairman, IBSA, and Hima Kushlani, Partner, Climate Change and Sustainability Services, EY. Pleasure having you both with us right here on News9. And of course, we would love to have you back on Budget Day as well. With that, it's a wrap from my side. Thank you very much for watching.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the Nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence.